All right, welcome everybody. Thank you for being on the webinar. I got a really good topic for you, as we always do, and this one I think you'll find really will open your eyes up to some things that I bet you, Eddie, a lot of people have been missing, because as we both know, and a lot of people on this call, real estate has fundamentally changed over the years, and you've had to make a lot of changes to continue to make money in this business. Again, that's why a lot of people are attracted to notes. But what I think you and I have found here is that a lot of people ended up forgetting that they also have to change their marketing. They have to change the approach. They're not looking for the right people, and that's what we've got in store for you today, right, Eddie?
Yeah, there's no doubt, Kevin. And first of all, let me say this, Kevin. It's probably helpful that they get a little bit of a sense of our backgrounds, right? So Kevin, you have been an appraiser. You've been involved in this business for at least 25 years, because I've known you, I feel like at least that long or close to it. And so you've been around this space a long time. I started a heck of a long time ago in 1980. And we have become specialists in this field because we've worked with so many hundreds of people that have been, out there in the field implementing these strategies. We've been their note expert, but we've seen what they've had to learn about the other side of the business, which was really the strategies of how they go sell their properties and utilize notes to their highest capacity. And there's no question that that what worked in the 80s might be different than worked in the 90s, or what worked in the 90s may not have worked in the early 2000s, and obviously so forth and so on. And I think that what we've arrived here is something that we've all known all along, and I think, Kevin, you and I just realized the topic we're going to talk about today was not a highly talked about topic, even amongst people that sold bank foreclosed properties, or people that tried to liquidate properties where they foreclosed on them. I don't think I don't know that it's the most difficult thing in the world, but we've tried to add a lot of definition to a topic today that has not been hardly talked about at all, which is this whole thing of you buy a non-performing note. It's a great deal, right, Kevin? It's a killer deal.
Yeah, absolutely. The prices with the inventories that we have are still very low compared to any other real estate play nationwide across the board. To buy consistently discounted properties like this, there is really no other place to go than this. And that's why a lot of people have been attracted to the buy end of this by coming in through the non-performing notes, simply as another way to acquire real estate. Smart.
Yeah, so and by the way, Kevin, we need to make sure that we make this clear to the audience. When you buy a non-performing note, it's usually a percentage of a realtor's opinion of value. The BPO, broker price opinion, is really a market value. And that's really the percentages that we're discussing. That's what it is, as a percentage of the real estate realtor's value. Although, as we progress in this conversation, you're going to see that we don't always pay the closest attention to what the realtor says is worth.
Yeah, absolutely. And you mentioned briefly my appraisal background. I used to be predominantly a commercial real estate appraiser, but also did some residential. But looking at that value, and boy, I'll tell you what, when I became an investor, when I was buying a lot of HUD properties, you better believe that I looked at other opinions of value above and beyond what a real estate agent sees, because I was looking at it now through the eyes of an investor. And there's a big difference on there as to what you see that a property is worth. And I know that's a topic that we're going to head towards on this.
Yeah, it's really a big thing, because you're going to leave too much money on the table if you get too generic in how you look at liquidating some of these assets. If you buy a non-performing note and you're unable to modify it, and you're going to end up with the property, either they deed it over to you or you do a foreclosure action, you're going to leave a lot of profit on the table if you get too generic in how you approach this side of the business.
Right, and it has become really the, again, last frontiers we have here of distressed property pricing. To buy this on a consistent national basis, certainly buying at one price, but then realizing there's a different opinion of value afterwards, that really becomes, well, what is your planned exit strategy? And very similar, obviously, with real estate here with notes, is you have to know going into these deals, how to get out, right? And it may not be, you know, working with somebody locally.
Yeah, no doubt about it. I mean, it's well, and that's what we're going to talk about today, right? We're going to kind of break this down, and Kevin, I don't think when we started teaching this, I don't think I heard anybody else in the marketplace describing this problem or this solution the way we described it. And I'm speaking like people that were like REO departments. I mean, like people with deep knowledge, and we just had to go kind of break it down because we started hearing this issue over and over, and we said, look, we understand the answer, but we had to come up with a way of describing it that really resonated with people.
Well, I'll tell you, you hit the nail on the head there, because it was an eye-opening experience for me too, because even with all these years of being in the note business, the real estate business, and to lay it out here, to think in terms really of laser focus now onto who to really target, it makes complete sense. You have to do that in today's marketplace because the investors have moved. You know, they're in different places, and you got to know who's the best for this particular deal. Where do I find them? And that's where I need to spend my marketing time and my marketing money. Otherwise, you're just throwing money away on this.
Well, I mean, the last bullet says you have to have a better strategy than calling a local realtor. Well, that freaks people out. People go, what do you mean not use a local realtor? Kevin, you've done many hundreds of fix and flips, right?
Right.
Okay. You and I know people that's done literally hundreds of thousands of fix and flips. Cumulatively, we know that many people with that big of a resume that we've had deep relationships with in our career, right, of doing this.
Absolutely.
I don't know a single fix and flip guy in their market that would call a realtor to go out and look at the house for them.
Yeah, and especially properties that are distressed. I mean,
right? Yeah, anybody can go look at it. Yeah, anybody can go look at a McMansion. I mean, if I had a McMansion, I'd call a realtor to sell it, right? But if I'm going out and looking at a low price band property, nobody that I know would call a realtor and say, "Well, go tell me what you think it's worth." Real estate investor goes out, looks at the house, and does his own determination because he's got to look through the muck. Right? And it's not that the realtors aren't smart, it's because the truth of the matter is you can't get an A player to go out there and look at an inexpensive house that's going to take some time to really poke through and figure out what you really got.
Yes, they don't really have that kind of experience. And again, we're not by any means picking on realtors. I'm sure we have many on this webinar, and we're not. In fact, I am one myself, so we're definitely not picking on there. But any realtor would agree when looking at the system, it's up to that individual agent to pursue their own education. A lot of them don't pursue their education as to what does it cost to fix property, what's the best pricing, what's an income approach to value on a property, how much cash flow could this property generate. And now again, there's always going to be some realtors that do that, but there's a lot of other realtors who simply don't have that experience, and you're just kind of hiring the wrong person for the wrong job.
That's right. All right, so let's progress on here, Kevin, because we got some bullets about talking about the realtor issue, and this is, let's just be fair about it, this is kind of the elephant in the middle of the room. And the most important thing I would say in selling a property, Kevin, this is an expression that I got from the appraisal industry, and it's called highest and best use. And the highest and best use in selling a house is selling it to the right buyer. You know, I could say there's a lot of people at the mall. Okay, I could go to the shopping mall and say there's a lot of people, but if I wore a sandwich sign around trying to sell a bulldozer, I'm not sure that that's going to get me the effective marketing technique, even though I'm surrounded by a large audience of people, right? It's the wrong environment. It's the wrong technique. And so that's what we're really kind of addressing today is we see people attempting things that they think, well, I'm putting myself in the right light, but they're not, because it's not highest and best use of the right buyer. So this is a good topic that we see a lot in Note School, that we experience in our own portfolio, and we just want to share some want to spend today and share some experience with you, so you don't have to go get the wrong experience.
Yeah, and what we're doing for those who've heard that terminology before, highest and best used in the appraisal world, that's typically applied to properties. Is better as a single family home or a duplex or a commercial building or an office building, a retail space. What we're looking at here is taking that and really putting a microscope on what is that single family home's best use, and that is most likely who my right buyer is going to be, and then let's target that right buyer. So it's an interesting way to approach that, and it does. It comes back to who does this person that you're hiring to market for you, what experience do they have in the proper space?
Right. So here's old Rick, the realtor, right? And I'm not saying Rick's not a smart guy. I'm not saying that Rick doesn't sell a lot of properties. I'm not challenging Rick's resume or anything. I'm just saying to you that when you're dealing in low price band real estate, the A player realtors that, and then there's a lot of them in note school, so we know them well, and a lot of them specialize in selling bank foreclosed properties. They just will admit to you the bank just says go out there and throw them a number and basically come up with a price it's worth for cash and quick, and that's what the realtor does, and they're not really paid to go do some deep evaluation of every possible workout strategy. For this reason, on the low price band residential property, generally speaking, a realtor is not going to be your solution. So let's pop some bullets up there, Kevin. Let's make sure we're, yeah, so here's the thing. Here's why realtors fail. It's low price band. They can't make any money.
Exactly.
They can't charge you enough money to go fool with it. It's not that they're not creative. You got to be realistic. They're not working for free.
Exactly. Something I mentioned there before too, most of them are not rehabbers. I mean, they just don't know how to price those. That's another skill. I mean, everybody on this who's done rehab properties, look, myself included in that, it took me a while. Thank God I had a coach that walked me through properties and taught me that kind of business, because I don't have experience rehabbing properties, but I bought over 150 of them because I learned that skill. And that took a lot of time. That took a lot of effort, and not everybody has the time and is willing to invest the time and money in learning that.
Yeah. No doubt about it. Yeah, it's just not worth an A player's time, is kind of what we said. And then the last thing is they sure don't understand seller financing. And a lot of strategies that we may do in selling one of these properties would be seller financing.
And that's going to turn more property, of course, in this marketplace. People are looking for alternatives to traditional financing. Once again, lower price band, it's so hard to get a loan today, not because of credit issues, not because of that. It's really because of, once again, financial reasons, where banks simply can't make enough money in some cases to even cover their costs to do a loan on that. So of course they're not going to originate a loan. And boy, if you're a real estate agent, or excuse me, if you're a real estate investor buying property and you're not offering financing today, you are missing a boat, Jerry. You're missing a big one, because that's where it'll open up a lot of buying opportunities for other people.
All right, so we kind of set the stage. A realtor's not our guy. We kind of gone through the reasons they're not our guy. Then it gets down into the property itself, and you said it correct a while ago, Kevin, when you said it's highest and best use for this property. And so this property is, depending on the degree it's repaired, as to, or it needs to be repaired as to how you're going to go about it. So some houses are pretty trashed and some houses are pretty slick. So a fix and flip guy, where does he come in? Well, a fix and flip guy is somebody that will buy a house in an as-is condition. And generally speaking, a fix and flip guy is not dealing with realtors. I'm very involved in masterminds, and I hang out with a lot of really A-player fix and flip guys, and I would say in the marketplace today, we're not talking about in 2010, we're talking about right now, and they're not dealing with realtors. They may have been buying REO from them back then, but they're not buying it from them today, as a general statement. So we're going to say, Kevin, that if a house is 60% repaired, meaning 40% not repaired, it needs to go to a fix and flip guy. It's not in good enough condition to go sell to any other party other than somebody that has the tolerance and the skill to go fix it. So we're going to talk about how to find this fix and flip guy and who he is as we progress. All right, so house number two. House number two, local landlord. So a local landlord will buy a paint and carpet deal. So you can get a house that's about 75 or 80% done, and a local landlord will go do paint and carpet. He's not going to go do a complete new rehab, traditionally speaking, but he will do a paint and carpet. So a local landlord, and by the way, as we progress in this conversation down the road, we'll talk about how to find these guys. Okay. Number three, seller finance. Seller finance to a consumer, somebody that wants home ownership, and honestly the banks aren't making loans to them because of the price band of the property. So a seller finance transaction. Now this house needs to be fully habitable. It may need a little bit of, may need some new carpet, or it may need a little bit of this, that. It's totally habitable. That somebody might go do some of the repairs themselves, like, paint or carpet or something that's more cosmetic. I'm not saying sell a house to somebody that's not in a habitable condition. But, sometimes when you seller finance, you're dealing with contractor type families, and that's a possibility. Okay. Fourth method, turnkey. If you have a house that you can give to an investor that has management in place, the house is totally fixed, totally good to go, and you can sell as a turnkey house, then the turnkey is an excellent strategy to be able to sell these properties. Now this is a deeper topic on another day of every little definition, and I like seller financing on these assets. I have found that these buyers, Kevin, will traditionally pay about 50% down, so they'll make a crazy big down payment, and you can sell it on an income approach strategy. And it's a market condition, and investors are accustomed to it, and so obviously that's a really a deal that you would really want to focus on. All right, so we've really broken down these four possibilities, and as you've seen, we have four, Kevin, completely different buyers.
Yeah, and this layout here really intrigued me when you first kind of scratched this out on a scratch pad, if you will, and I looked at this. I had never really seen it laid out like this, and I'm going, God, that makes so much sense today. It makes so much sense that you don't just blanket advertise to everybody and waste a lot of time. You got to drill it down, and I think it's absolutely true where these targets are about spot on of what you're looking for, because those are the right buyer. That's going to be your highest and best buyer. That's what they're going to see, is the potential where they can make money on these deals. So let's break all these down a little bit more. Eddie, talk to us about the fix and flip investor here. Where are they today? Where do we find them? So if I ended up with one of these properties, maybe I bought a non-performing node, and I'm looking to now on my exit strategy, maybe I'm not interested in fixing it up myself, or putting some work into it, but maybe not rehabbing the whole thing. All right, I've identified a fix and flipper as my target person. Where do I find those people? How do I market those folks?
Yeah, let's progress. I think we got a slide on that page, and let's just kind of progress and look at this fix and flip guy. So I know a lot of fix and flippers. I'm in a mastermind with a bunch of these guys. I mean, it's an expensive mastermind. It's $25,000 a year, and these are all A players that are in there. Fix and flip guys today are not the ones putting out bandit signs on the corner, right? You drive around any town, Kevin, and you see a residential and you see the bandit signs. And I'm not criticizing people that put out the bandit signs, but for the most part, the people that are doing that today they're newbies. They've just gone to a seminar. They're just trying to get started. Okay. Right. And I got no issue with that, except for the fact that their tendency is to tie up a deal and then get scared and not close, or find out they can't get the money, right? So I don't want to find out that I've got my house contracted to somebody and I'm find out that I'm deal number one. And so to find a fix and flip guy, there's really two ways to do it. First of all, courthouse research would simply tell you somebody that's probably owned a house, 6 months or less, and that's real courthouse research. Can't get any better than that. Okay, I might find him through hard money lenders because they're loaning money to him. So I might reverse engineer and look at hard money lenders in the courthouse that I know are hard money lenders and see who they're loaning money to. And then the other thing is that most of these guys today are doing internet marketing, and they call it search engine optimization. It's SEO marketing. So I can start Googling Kevin in Orlando or Atlanta or Dallas or Columbus, Ohio. I can Google investors pay cash for houses, that type of wording, and that's going to tell me people that are doing that kind of advertising. I'm not looking for just one guy. I want to get enough people looking at this asset, and I don't want to let anybody tied up until they're willing to go firm with some earnest money. Okay, I don't want to let them tied up and then find that they're going to go do it. Then they're going to really do a property inspection. So I'm going to be a little bit careful because these are the sharpest guys out there. Some of them are honest, and maybe there's one or two that isn't so honest. Or you can't blame them if you let them tie up a house and they got no risk in tying it up. They're going to tie it up, and then they're going to do all the work, right? Then they're going to figure out what they really want to pay for it. So you can't get mad at them. It's just a market condition. But don't let them do that. And this guy is not riding around looking for yard signs. He's not calling on realtors.
Right, so you're not looking for the guy or the gal who it's their first time buying a deal, and you're looking for ones who do this on a regular basis. And what you're saying here is that those folks are no longer, look, everybody I think back in the 20 years ago used the bandit signs, but you're right, not so much today. The ones who are doing the business, they don't do it that way. They're setting things up through the internet. You can find them through the internet, and that's really how more and more they're finding deals is through that search mechanism. So we've got to shift how we market from getting away from that local one investor is buying a couple deals here and there, and you're saying crank it up a notch and find the guys who are really doing this on a bigger basis. And then of course knowing how to work with them properly would be the next the next part of that, and
that's it.
Following through.
And what we're giving you is relevant to today. And we might have a completely different answer 4 years ago, but today what we're saying is exactly how most of the guys that are enough of a player that I want to deal with, that's where you're going to find them. That's the shack they're hanging out at.
Right, and it's pretty easy once you have an investment company to really also, not only you're saying Google search to find them that way, but you can get to public records pretty easy and see how many transactions they've actually done. If you're a little bit savvy, you can find that out. That's not a difficult thing to do. All right, what about the other next step up was our local landlord who's looking to take on maybe a light rehab and then keep a long-term strategy. What's your thoughts on that today?
Yeah, let's look at this guy. So this guy is probably not buying the biggest rehab project overall. I'm kind of classifying these guys, but I know a lot of them, so I sort of know where they're wired at. But so he'll buy something that needs repair yet, but maybe not as deep as a fix and flipper. And so he's renting houses. So I would go look and see where where people that are advertising houses for rent. You look for houses for rent. You're calling what, Kevin?
You're
a landlord.
Yeah,
that's your avatar. Yeah. That's your guy.
Mm-hmm.
You can call property management companies. You can call directly off of signs, and then also the predominantly the cash buyers, the local cash buyers are going to be landlords. They're not going to be fix and flip guys because fix and flip guys historically aren't paying cash. They're getting a loan. But cash buyers are traditionally landlords. So that's if you ask me, I'd find them. I'd go find out where they're trying to rent other houses, or I'd go in the courthouse research and find people that have been paying cash for houses in that same market. That's where I'd aim at.
Yep, internet's a wonderful thing. All right, what about the next group there, the ones that were seller financing, but specifically here to a consumer? Consumers looking to buy houses but can't get a loan.
These people are probably not looking on the internet. These people are responding to a yard sign. And I know just thousands of people that have sold houses with seller financing. I mean, this has been my space for a long time, almost 40 years. So this is something I've done a lot, and this is one of the most effective techniques in selling this house to this guy is owner financing and hang a sign in his yard. Because the deal is their sister or their mother or their best friend lives down the street, and they like the neighborhood. They went there on Sunday for a picnic, and now they're riding home, and it says house for sale. And you can do Craigslist and you can do some other things. Having a local realtor list the house for you with seller financing, in my general experience, is not going to be effective. Yard sign and put your number in there. Owner financing for deserving buyers with large down payment, Kevin.
Exactly. Yeah. So it's an interesting dynamic where the signs work here, but not so much looking for those fix and flippers anymore. Because again, the markets change, and we have to calculate where we start to look for these folks. So makes sense to me. What about the turnkey rental investors? They want everything done, right?
Yeah, and we've got a really cool training on this. I mean, we worked it. Kevin, you and I worked on this for literally probably a year and a half before we ever went out with it. And we got a really cool training because we know this is such a miss market. The house has to be fixed up, it's got to be rented out, and then you sell to an out-of-state investor. And for the most part, you're going to use courthouse research of people that have bought houses and live in another market. So you're doing the opposite of selling to the local landlord. Now you're selling to an investor that, say, lives in California, and yet the house is in Ohio, hypothetically. And then, but you have to have all the other components done. So we've got a lot that we've done and said in that regard. But here's the cool thing, Kevin. We see houses that, the realtors have only cash comps. And it'll be a safe neighborhood. It's not unsafe. The house is not a piece of junk. But the realtor comps it out at $55,000, and yet it rents for $950 a month. Well, it is no way it's only worth $55,000. But you have to go get it in a turnkey position and sell it to somebody that has an appetite for that and passive investment.
Yeah, somebody looking to place money. This is a way people diversify their portfolios. There's a lot of nervousness about the overall economy, the stock market, and people are diversifying, and they're looking at rental property. Why? They understand it. They've been a tenant or a landlord at some point in time, and now these turnkey investors, they want to come in, they want everything done, they want it done properly, and they look at the value as to how much cash flow is this kicking off to me, right? That's really what they're looking to do, build up a portfolio of these, and heck, you can sell or finance these to those investors as well, right?
Yeah, but we found that the common strategy is about 50% down. Now, all of the strategies we've been mentioning here, we're going to tell you, we're going to kind of give you a resource here at the end, but these are all things that we take to a deep dive. We know that we're just kind of quickly going through this concept today, but we're going to show you how we do it and how students do it, so it's not like you can't go figure out how you would go implement this process. So selling to out-of-state investors is on this scenario is definitely the most lucrative way. So Kevin, we've kind of got a slide that shows, because we keep talking about this, we have shown 4 different property scenarios and 4 completely different buyers, right? And just kind of animate that out so they can kind of see that one at a time. You've got the local landlord. He's in a totally different direction than the fix and flip guy. Then you've got the seller finance guy. That's a completely different buyer than the other 2. Then you got an out-of-town investor. Well, he's certainly different than all the rest of the 3 of these, right? So when you figure out what your property is, then you reverse engineer that to go figure out how you're going to go sell your property for the most money. And that's where it gets back to the punchline that Kevin and I gave you right at the very front, which is highest and best use. Kevin, I know people that have been around this industry a long time, and when we explain this to them, they totally nod their head and they totally agree. But
like I said, I kind of had that aha moment myself when it was laid out this way, because I never really had thought that this way about it, and it seems, once you see it, it seems, well, of course that's what you would do, but it's getting to that point of, oh wow, that makes sense, and now I've got a set direction, and you can turn deals a lot faster by doing it this way, no question.
Well, just one quick story before we leave this thing. You know, I had people selling properties for me that were really good at one or two of these strategies. Agents that, I'm not agents, but REO departments that were selling properties that we had foreclosed on. But I realized that the other customers they had really no experience with. Smart people, but they weren't smart universally, right? They were smart, very, very specialized and very seasoned at one or two of these strategies, but not all of them. I had students, some of them were REO agents, some of them were super seasoned fix and flip guys or landlord guys. I mean, I had students with incredible real estate backgrounds who would kind of get frustrated trying to go sell a property because they're like, you know, I call the realtor, and I call it the bulldoze thing, right? The realtor, you know, you show the asset to the realtor, and the first thing they say is call the bulldozer, right? Well, maybe not, because I know that fix and flip guys, truthfully, I know the fix and flip guys are dying for inventory.
Oh,
I mean,
yeah.
I don't know any fix and flip guy in the market today that says I got more inventory than I know what to do with. So if that's true, then you have to figure out of which one of these components, and it's all fairly close to kind of how we said it, the percentage of repairs. If a house is totally repaired, you'd be dumb to sell it to a fix and flip guy. If a house is not habitable, you'd be dumb to sell it, trying to sell it as a turnkey property, or unless you're going to fix it, right? You can't sell it as is to a seller finance person or whatever if the house is like needs a whole bunch of repairs. So then it helps you start figuring out which marketing media you do. So Kevin, I know people at this point are going, this makes sense, I like this, but what's the real deal look like? So let's talk about how we might get with you and spend some time and look at a real deal.
Yeah, absolutely, and that's at our 3-day live training, and our 3-day live training is just that. We have talked to, I think we introduced the call by saying, look, real estate's changed, our strategies have changed, how we market has changed, and guess what? Our training has to change as well, and keep up with this. We keep all the state of the industry, what we think is very forward looking information showing what's going on right now, how do we make money now, and what do we do in the future, and that's what we have at our live 3-day trainings.
The best way to do it is to go create a situation that is as close to leaning over our shoulder on Monday morning. And that's basically what we try to do. We create an environment in these classes where we take real transactions and we go out in the marketplace. And Kevin, you are a giant in research. You are very good at getting the whole class engaged of, let's take this deal and let's figure out what we got. And then once we figure out what we got, let's figure out how we would go find this person that's our, as we refer to, our customer, right, our avatar. And we really, in this 3-day class, we talk about what we refer to as the 6 niches and notes and that are being used today. How to buy property with owner financing, how to sell it, how to buy notes, performing notes, non-performing notes, how to go give a real estate investor a formula so he can create owner finance notes that are good notes that you want to go buy. So if this is of interest to you, this is how you reach us, and call the toll-free number at Note School, and we'll be glad to send you some information on it. Won't be any pressure. If you like it, if it's a fit, we'd love to visit with you about it, and always happy to answer any other questions otherwise. But there's the number there, 888-980-9240, and you just simply go to noteschool.com and you can click the website and it'll have that same phone number. So Mr. Kevin Shortell, you are very good at bringing things to a laser point, and I think you took a pretty good subject today, subject with a lot of depth to it, and I think you really helped paint the picture with folks today as to what that looks like, and I enjoyed doing this.
I enjoyed it as well. I appreciate it.
All right, you guys have a great day.